I hope you're doing well. Before starting this video today, I would like to wish you and your family a very happy Diwali and a very happy, prosperous, and a successful new year. So let's start today with the questions that have been asked on YouTube and on other social media platforms. So, in YouTube, for the creators, there is an application called YouTube Studio, and within that studio, there is a, a tab called community, in which statuses or responses which I have not responded to or messages that I have not replied to have a separate section. So my intention is to go through them with you and share my perspective on the questions that have been asked or the comments that have been made. So Saurabh, of course, I know him from other platforms as well, including Upsurge. He has commented on the video related to Fibonacci support and resistance, that many doubts are cleared and many concepts were learned. So obviously, thank you for that comment. And in this particular video related to Fibonacci support and resistances, or let's just say support, the point that I'm trying to make is that Fibonacci supports are used to determine the strength of a trend. In fact, any pullback is used to determine the strength of a trend. If the pullback happens at the first few levels of Fibonacci, then the trend strength is very, very strong. If it happens at the second, third half of this Fibonacci, which is the 62% or the 78%, then the trend strength is very weak. And a trader needs to have a plan to trade bullish strong or bullish weak stocks. And the plan could be as simple as I do XYZ things on a bullish stock, a strong trending stock, or I do not trade bullish weak stocks, things like that. But there needs to be a plan for each market type. So when that market type presents itself in the time frame that you're trading, you are going to deploy that particular part of the plan, and the plan also could mean no action. Uttam Singh has I obviously have interacted with him in the past, and he said that you are one of the best traders in the country, which is true. So I thank you very much. I think he's referring to a point that I made in a video in which I was featured in the Grow channel, and in that video, these are separate institutions, and they have a different marketing team, and the objective of their marketing team is to follow a process while they're creating a video. And one of the parts of a video process is called the hook, and in the hook they want the individual to make a bold or a polarizing statement. I think that's the point of a hook. So when it came to my turn to present the hook, we obviously struggled a little bit, but eventually they simply asked me the question, who do I think is the best trader in the country? And I said that I do not know. I think means it is my perspective that I am the best trader in the country of the traders that I know, because I know only a few hundred or 1,000 people in the country, and I think they are good. They just have different styles, but I don't think there's so much of a gap between them and me. Even if some traders maybe might have earned more or whatever, I don't feel that kind of a comparison. I'm just trading at my own pace and going through. So what I have basically done is I have listed out what, in my view, are the qualities of a good trader, and I try to reach there with my habits and actions. I try. So each day is a progress. But yeah, so it's a part of that hook. In this channel, that is Arthigamya's channel, you will see that I don't use hooks, I don't use sound or video editing, I don't use very, very fancy thumbnails. The objective is to simply communicate and to keep it simple so that it is easy to produce this content. And because content creation, I'm not a content creator as of now or per se. So yeah, the idea is simply to create content, and keeping it easy is one of the ways of ensuring that that more content is created. So thank you for your comment, Uttamji. Nisra Sile has mentioned that please teach us how to make money when the market is going down, which essentially means to sell the market. You will have to obviously reverse the rules that are given in order to short the market. And in general, the shorting of the market works under the similar concept. You have to identify a stock which is trending either bearish weak or bearish strong. You have to wait for it to get overbought on a time frame, and then finally on your trading time frame you'll have to wait for the confirmations to enter. The process is exactly the same. The reason why I do not talk about selling the market is because trading has become extremely expensive, and um, and I also believe there is a very very high probability that we could be in a very strong bull trend. So I don't want to communicate very short term trading ideas on the channel, because the videos get remained for a very long time unchecked, and yeah, they could send in the wrong message. So I have chosen a direction, and I will obviously face the consequences of that decision, good and bad both. So the point he makes is, I'm afraid that I will hit all stop losses and market will keep going down continuously. So if you're afraid, then there is a probability that you have invested more than you can risk. It's You will have to cut down on your investments a little bit. So for example, if you have invested 10 lakh rupees, maybe you could just book out 2 3 4 5 lakh rupees, whatever is to your comfort, to reduce the risk in the system. And yeah, and the only time all your stops will hit all stops, meaning you have multiple positions, only time when multiple position stops hits are when there is systemic risk. And systemic risk does happen in the market. For example, October 24 to March 23 was a period of systemic risk, where anyone who was long had to pay the price. There was simply no getting away from it. There was no stop loss that was defending or holding reasonable stops, I mean. So it sent back trading systems, it reduced the trading speeds, because they had to keep wider SLs. Then at the same time, the entire costing related to trading was also changed. STTs were raised 100%, ELMs are raised significantly. Trading as an industry has been badly damaged by the latest developments, regulatory developments. So all of these factors basically mean you have to reduce your trading. You have to reduce the frequency. You have to reduce your dependency on trading. The developments on trading have been very very negative, and yeah. There are two ways. Either let's say we go long today and the market hits a systemic risk tomorrow and we book the loss, or we go long today and the market hits a systemic risk 10 years from now and we book the loss at that time. The whole point of money management and position sizing is that the longer that the market takes to hit that systemic risk, the more profits you will retain and the more money you will actually make. So whenever the systemic loss happens, you have to exit. Those positions have to go out in a loss, but that loss is what part of your overall earning till that period is what is going to decide. And that is the point of building a system, determining quantity and focusing on the SL from day one. And all these good practices are all designed to protect you from the day when the inevitable systemic risk is going to be realized. In that case, I want to make some profit already. So if you want to make profit from a short falling market, you obviously need to sell positions. But the risk is that if you sell positions and the market actually rises, then you are actually giving away some of your gains. It's a trade-off actually, and in my view, why should I work harder for a trade-off? So I might as well as just work hard and choose one direction, and if that direction actually works, I should get paid. I mean, so that seems more fair than rather than working very hard and then making average amount of money. So yeah, if you're taking a risk, then why not? I remember you trade both long and short. It is true. I used to trade both long and short, but 2024 September onwards, there is no question of trading in both directions. You have to choose one. The cost of trading is just too much. This entire industry is actually a victim of its own regulators. So there is little that actually can be done in that context. See, if you trade both long and short, the thing is that I don't know what you're going to make, but I know that the exchanges are going to make a lot of money. Okay, you have to choose something which limits your trading, and limiting your own trading has become a part of the trading system. Otherwise, you're not going to be profitable because the costs are simply too much. I don't want to sound negative, but if there was any other business in this country where you raise the cost of doing business by hundreds of percent in a single financial year, I am very confident people would come out and धरने होते हैं मतलब सड़कों पे, the people would be protesting on the streets. But since it's traders and we are just a small fraction, and in general people try to hold you guilty for trying to make money through trading. The society is getting shaped in that manner because of how there are multiple reasons. Basically, the communication, this is obviously this is one form of communication. The other form of communication is because people pay you to communicate, and when people pay you to communicate, there is an underlying message that needs to be sent. And if the underlying message that needs to be sent is, let us say, mutual fund sahi hai, investing in mutual funds is correct or good for you, there is only a finite pool from which they are trying to take that money. And if they understand that a particular person has put 3 4 5 lakh rupees or 10 15 lakh rupees in a trading account, then they try to talk that person out of it and try to set an example of his or her failure as to why mutual funds are the correct alternative. This is textbook ambush marketing. We see that, but okay, means what can I say? Trading is very expensive. We choose a side and we stick to that side, and we hope that if we are going long only, that a systemic risk doesn't hit us 8-10 years till now, and in that much time I think we should be comfortably sought. This is what I'm hoping for. Let's see. So to do both long and short, my point would be just reverse it. But are you willing to work that much harder? Are you willing to see the same security from different perspectives? Okay, it's individual to individual. Mahesh has sent out a message. Sir, I'm applying to be a research analyst. Can you do a video on this topic explaining how to deal with clients after becoming an RA? Okay. And what rules need to be followed for becoming an RA? What fees will be charged along other important. So firstly, he's asking about the process of our application. Then the next step is customer relations, and then is the SOP of doing business. Then he follows it up by asking, I researched on YouTube and found a CA with a big channel charging 1 lakh for guiding through full register. 1 lakh rupee for guidance. I mean, that's just obscene. I think there is no chance that we are paying that kind of money. 1 lakh rupee. I mean, it's impossible. So I just, wow, 1 lakh rupee for guidance. I think that's too expensive. I'm shocked actually. I'm shocked. CAs get paid 1 lakh rupee when they handle tax returns for people who be making maybe multiple crores of rupees. Then you pay that kind of money. I don't think so. You pay 1 lakh rupee to anyone. So if you could make a full video on this topic, it would be really helpful. Full video on this topic, yeah. I mean, see, the thing is this, that I'll just check if I have. So here, this is the SOP of a IARA. Okay, it's all available on download. It takes some time to go through. Maybe someone just wants to charge 1 lakh rupees so that you don't have to go through these pages, but these pages are not that much. So the first step is obviously the conditions under which an IA and RA are listed in the exchange. This is what you are looking for, the new applicants for an IARA. When you do this, these are the portals where you have to submit your documents and your corresponding fees, application fees, etc. All of this will be in these links. You just have to, I think, go to SEBI score site, or simply just Google the SOP of IARA and you will be directed to this page. Here are the links that they have given. Renewal part, actually now I don't think so is that much applicable, because all RA license are at least now available till perpetuity. This is till July 24th, where we have to submit this GSTIN, TAN, SIN. These are all for companies, right? This is corporate company identification number. These usually happens for organizations. And post enlistment steps are given. This is the fees that you have to give. It's just in thousands. That means you have to focus on the individual part of it. That is the fees that is payable. It should be a few thousands of rupees. I remember getting it done in 15,000 rupees in total. I have not paid any renewal fees, because renewal fees are applicable after 5 years, but I believe that they have changed it to perpetuity, so I'm not too sure now. And these are these contact numbers. I mean, you could just contact them, and I'm confident that these individuals will WhatsApp you the link from where you can download it. So so this is the SOP. This is what happens after you become an RA. Basically, this is the audit report that you have to sort of submit. Um, Personally, I have the RA license, but I don't conduct any advisory business, and I'll come to that why I don't do it, and etc. But I'll just show you. So, any which ways, these regulations will basically talk about, you know, when will a person be granted certain, what, like, what should be your education qualifications, what should be your financial background. These things are all listed out here. It's not very difficult actually. Uh, and this is now something new. This is since 15 December 2024, where they're saying that we have to deposit a 1 lakh rupee. In my view, this 1 lakh rupee is in the form of an FD. I do have that FD. I find it obscene to deposit 1 lakh rupee to SEBI. I do not know why anyone would have to do that. And above 1,000 clients, you have to deposit 10 lakh rupee. That's just too much. 10 lakh rupee, I mean, it's an amount. For what? Deposit for what? What are they going to do with that deposit? I mean, why do we have to deposit anything? You know? Any which ways, they are the regulators. They can come up with a rule or whatever. So they're doing it. So they're saying deposit 1 lakh rupee. In my view, this is an FD, which can be done. The conditions of certificates. Now here is the reason. I think the fees, how much can an RA charge? I think the charges are, I mean, it's not mentioned here, but there's another document which restricts it to, I think, 1,51,000 plus GST. So about 1.75 lakh rupees is the fees that you can charge per person. So fees is obviously the reason why someone would want to do it, and why someone like me wouldn't want to do it is because of regulation 16, which is limitations on trading by the research analyst. You have to sort of submit what you're doing in the markets, and more than that, if I take up a trade position, let's say on 1st of October, I cannot communicate it to clients up till 1st of November. And as we all know, most securities which are liquid are the same expiry securities. So essentially they are saying that if you want to do your job as an RA, you should not be trading. I mean, if you just go through this limitations on trading by research analyst, so here they're saying personal trading activities of the analyst shall be monitored, recorded, and subject to formal approval process. Okay, I mean, imagine, like, if I have to buy, let us say, for example, a Tata Steel, I need an approval for that. I mean, are you serious? This is so stupid, right? Limitations on trading by research analysts. Independent research analysts, etc., 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 shall not deal or trade in securities that the research analyst follows within 30 days before and 5 days after publication of the report. So 30 days prior to buying and 5 days after selling is actually the rule. So for example, if I'm doing it for a micro cap company, I understand, like if the company's market cap is just 30 crore rupees, then a research analyst who is very influential can alter the market cap of that company in a single video. But if I had to do it for Tata Steels or Asian Paints, I mean, it's just ridiculous. It's simply ridiculous to have this kind of a regulation. And the exchanges are supposed to keep those stocks in the FNO segment which cannot be influenced by individual research analysts. That's my view. I mean, that's just how it should work. I think the individual research analyst, if front running is such a fear, then they should simply say that you do not go below Nifty 500 or Nifty 200, or they have to come up with something like that. But they cannot come up with something like this, that that the individual research analyst cannot take the position themselves based on their own research. I mean, see, this is a qualification to complement what I'm doing. It is not to quit what I'm doing, and that's my view. Limitations on trading by research analyst. They shall not deal in security in a manner contrary to the given call. So, for example, if I give a call of long Tata Steel, then I cannot myself short Tata Steel. This is reasonable. But who's going to check all of this? I mean, who's going to submit all of this? Who's going to check all of this? Then here we have some more. This is related to IPOs. Okay, I don't do IPOs, so I don't need to actually even read it. Yeah, so this is related to how one business activity should not be matching another business or arm's length. So you would often see this provision is included. For example, there are people who offer education, and then in their education they will upsell it as an advisory. So if that arm's length means that business A is not really connected with business B, but in reality it's not practical, right? I mean, it's simply not practical if an individual is in the trading ecosystem that they are going to have an arm's length active. I mean, even with the mutual fund distribution, how can it be? If I become an extremely popular trader and people are saying that we trust your opinion, and if I go out there and say that let's just go and buy this XYZ mutual fund, um, uh, that why is that person even listening is because of the initial work that was done by trading. So how is there ever going to be an arm's length? So that's very difficult to establish. Okay. So yeah, compensation for a research analyst is mentioned here as to so there's a lot of regulations, limitations on publications of reports. These are all these regulations, and I don't think so individuals are going to be able to comply to any of them. I don't even know what the exchange is trying to protect. I mean, the biggest problem is the fact that people who are in the stock market don't have the money required to be in the stock market. And the reason why they don't have the money required is because every year the exchanges raise the margins and their costs associated with trading by hundreds of percent as per their discretion. The exchanges have learned that the best way to protect the retail investor is to just not have them in the market. So all these regulations are actually baseless. The practicality is that no research analyst worth their salt is going to give an advisory call to a retail public in general, because the retail public simply does not have any money. I myself have I can guarantee at least 50 open positions in the market just now, and I do not know. I would want my clients to have the best performing five. I really would, but I do not know which of the 50 are going to do well. So I have to create those 50. So I have to generate to create those 50. Would have placed orders for 100, maybe 10, 20, 30 SS would have got traded. Where is a 5 lakh rupee client going to figure out and all of that? So yeah, so therefore, just coming back, I have just tried to share the regulations with you. The idea is, but yet in my video, I have said that individuals should do this RA licenses, because most likely you have a trading account of just 5 lakh rupees, and since you can charge up to 1.75 lakh rupee, you just need 3-4 good clients, and it is more than your trading account. But in my case, this is not the situation. I am not willing to let go of trading for advisory at the moment. And in the past, what I've had to do, because as an RA, I cannot give my own trade recommendations forward. There are certain marketing and sales companies who would want to uh, who would want to give the trade recommendations forward, and there are clients who are willing to pay them, and those trade recommendations should not match my trade recommendations. So this forces actually RAs to work with other companies who are going to distribute on their behalf, because obviously there is no chance in which I can share what I am actually doing as per that regulation. And yeah, there are certain other steps which will make it a question on whether or not one wants to continue with this or not. But these are my issues. They are not necessarily the world's issues. For a person, generally becoming an RA is going to be extremely profitable, and it's an easy business to run compared to, let's say, for example, any other business. Having an RA business is slightly easier to run. But I'm but yeah, but I don't think so we have to pay 1 lakh rupee. This is all a tedious, lengthy-ish process. It took me a year to get from the time I applied. I cleared the exam. From the time I thought, if I clear the exam, I just get the license. That's what I thought initially. I later learned that I have to go and apply, and then I later learned that it takes a year after application to get it. So it's a long term thing. Now of course it is much lesser. Now they do it in 3 to 6 months, but I'm talking back in 2020, 2021, where they took a longer time. How would I manage clients? The thing is that I do not I wouldn't want to manage clients, because you know losses are a part of the trading, and if we have to manage them after that, they are inevitably going to leave any which way. So there is no point in talking them into something. And when you have lengthy conversations with people, you are you could end up saying something that you later on regret, which is, you might end up saying that don't worry, you will recover, and it's not a carving on stone that you will recover. So the individual, if they've had it enough, they can simply stop. That's just how it should be, in my opinion. And in my opinion, you should try and create a distance between yourself and a client. The reason why I'm saying this is because your interactions with your clients are going to negatively impact you as a trader. The day you start thinking about your clients in your trading decisions, you are going to suffer in the markets. You have only one job: this security I'm analyzing, is this security in an uptrend or not? If it is in an uptrend, has it sufficiently pulled back? Should I try and bet? Where will be my exit? What will I do if this happens? What will I do if that happens? This is your thought process. What someone else is feeling, I do not know. If you it'll take a lot of skill to be able to compartmentalize your thinking, to be able to do that. So you do what the exchanges are doing as per regulation 16, that you don't trade, you simply analyze a stock and then communicate to the client, and then handhold the client into buying or selling that stock and get paid well enough. Like, that should also be fine. Shobha Garg, good morning. I'm a part of a membership program on Upsurge and following. Thanks for giving us a system which is superb. Yes, that system is actually going to be very exceptional. It's not simple. It takes time to grasp the many things that are there in it, but I do believe that's a very, very good system. I have my doubt regarding three systems like momentum, in between, and longer durations trading systems. Okay. This is also fine. So she's basically saying that she's using the 20-week moving average. Then okay, so she's using this on the monthly, then she's using RSI on the weekly, and daily for exit and entry as per ATR. This is fine. As per my understanding, moving average on the monthly are adjusted for having smaller or larger watch lists. I want to know which of these three systems I'm using and what. No. I'm confused. No, I think, see, Shobha, basically there is a multi-time frame system that would have been there on the mentorship. In that multi-time frame system, rule number one is simple: that if a security is trading below the 20-month moving average, you will simply not even include it in the watch list. So that's the watch list SL. That part of it is closed. So the watch list SL is, if trading below 20-month moving average, it is out. Now consider a security which is trading above the 20-month moving average and it becomes oversold on the weekly. Then you will have a trade SL, and that trade SL will be based on the daily entry and exit as per ATR, which is correct. So your security could hit a trade SL, but not necessarily the watch list SL. But if it hits a watch list SL, there will never be a trade SL. I hope that part of it is clear. So we are simply deciding on, first of all, to create the watch list. So when you create a watch list, security is trending upwards, trading above 20 period moving average. Let's say 100 stocks qualify. Now those 100 stocks which are qualified, and or let's say 400 stocks got rejected, that rejection and qualification was used to create the watch list. Now once the watch list is created, which of these 100 are becoming oversold, that is where you apply the second part of the system. You're understanding? You don't apply the system of which of these are oversold to the entire 500. So the system first is, in order to deploy a trend following system, the first part of it is to create a trend following watch list, and that is what we have tried to cover. I hope this has addressed that question. Most welcome, Sasikala Rao. This is correct. Fundamental triggers and technical indicators do work the best. Sudhir has always been supportive. Nisarg, I think I met him in Ahmedabad also. Okay, enjoying. So I think, yeah, this is basically when I was in Himachal, when I created that video. Your clarity on range bound markets and planning for the worst case. So planning for the worst case is the only planning that we have to do. We don't have to plan for the best case. I mean, market is moving in our favor. That's it. There is no plan. We just sit. We only plan for the worst, and if that happens, we are so well rehearsed in our mind that we are just exiting. Thank you for keeping it real and relatable. Thank you for appreciating that. Looking forward. Thank you very much. Udit has asked this question a few times. Sir, I have a mere corpus of 2 lakh rupees and get your point of getting into a futures trading with a 50 lakh portfolio, which is fine. I'm inclined towards trading commodities, which is okay. You could trade gold mini, silver mini, crude oil mini with this 2 lakh rupee capital. but I won't be able to dedicate my time due to time. No, see, now what is this, Udit? You have a capital constraint of 2 lakh. That's first of all a very, very big constraint, which means that you have to trade very small time frames like 15 minutes, 1 hour. Then on top of that, you have a time constraint also. So it's okay, now. So you should not trade. I mean, you should not trade. Do you think trading 5 MA, 20 MA crossover is a good idea? See, good idea, bad idea will only come into play when you're going to be doing this for a seriously long amount of time. If you're just looking at it sporadically, then the better idea is to buy a national pension scheme. That's the best idea. In wealth creation course of commodity, so you must understand, so when I'm creating courses on upsurge, or when I'm creating anything elsewhere, what happens is that you're given a question and you're trying to answer that question, and that question becomes a section, and some of that section is payable, some of that is free. Okay, using a 5 period 20 MA crossover is no different from using ADX, which is no different from using Dow theory. We are simply using this crossover to define if something is trending up or not. Once it trends up, we want to buy it in oversold conditions. The question is not that you have 2 lakh rupees and no time. I'm not understanding. I think you are asking a technical question, whereas your constraints are completely personal. What do you need for trading? You need 2 lakh rupees is fine. Okay, you have that, and you are planning to trade commodities, which is also fine. But no time. I mean, at least you need weekends free. So you need to build a system which works on the daily. So I earlier said gold, crude, and silver. Maybe you can just choose one. Just choose one and increase your time frames. And once you become a professional trader or starts taking steps in that, then we can choose whether 5 MA, 20 MA, or 20 MA, 50 MA. We can make that decision later. But I don't think so. What else could be done? I think you need more clarity. You need more clarity. It's not necessary. See, dekho, you must understand. Let's just say you are drawing a salary of 5 lakh rupees a year. It's not a difficult expectation to make. You have 2 lakh rupees. Even if you make 50, 100% year on year, for next 2, 3 years, your salary is going to do better than your trading. But the kind of time that trading is going to demand is going to be disproportionate. It cannot be like you put half an hour or 1 hour. In fact, your first 3 years in trading will demand more time than the next 3 years in trading. So it's much like trying to plant something which gives fruits maybe 10 years later, 3 years later, 5 years. The amount of effort initially is huge. And that is the reason why I feel that you're very structurally underfunded to appreciate the gains that you're going to get in case that effort fructifies. But if it doesn't, then you are going to waste obviously time and everything. And what about the main job? So that I feel that you should think it through. You really should. And buy commodities. Why just not trade equities? I mean, just do it weekly equities. Why do you want leverage? Don't take leverage. If your money is constrained, time is constrained, then shouldn't leverage also be a constraint? Saurabh, this is obviously, thank you. Okay, break the Kelter. So Kelter channel is basically when I would speak about stop and reverse. And in stop and reverse, the rule is simple. If the higher band of the channel breaks, you do not short the market. Whether you use a 20 period moving average plus minus 1 ATR, or 10 period moving average, or whatever, or 1 ATR ki jagah 3 ATRs, is completely up to you. On daily time frame, then we go to the hourly for oversold. No. Kelter channel is not going to give you the trend. Okay, Kelter channel is not going to give you the trend. You can go to the hourly charts in order to time your entry. But Kelter channel is simply saying this is the direction. I mean, even though, believe it or not, it's not the trend. This is a channel break. A channel break is different from a trend. I'm having a period of RSI where the 40. No. You're here. Everything is mixing up. You are mixing up different things with different things. These are. Can I use 2 hourly charts? So you're all over the place on this one, Saurabh. It'll just think it through. You're mixing up too many things. Most welcome. And I think here Mahesh's question is repeated, which was there in my mind. Okay. So Shanil, yes, I've spoken to him. Stock has broken its all-time high. Okay, is trading below 20 MA and okay. So this below 20 MA and above 50 MA on monthly time zone is called as the value zone. Stock is not. If it is not below 30 RSI, we will have to wait for it. No. in your, so I think what is happening is he's mixing up with upsurge lessons and something that we are seeing in terms of inverted hammer. um yeah, there is I think Shanil, you'll have to see these videos differently from upsurge videos. That's the thing. So when I'm talking about inverted hammer, when I'm talking about a particular pattern, what I'm talking about is a specific point of price action. When you're using 20 period moving average 50, you're talking about a trend qualification. These are totally different. Now, in this, when I'm talking about LIC as a stock in general, then I'm talking about the price action of the specific feature of the stock. If I use my full system, it is possible that such a stock may not qualify. The question is then, why did I do the video on LIC? And the answer is because it was in news for some reason. And the fact that it was in news, I just decided to cover it. So yeah. So what I mentioned here is not factually, to the best of my knowledge, not incorrect. What I have taught in the course is also not incorrect. I just believe they're totally different, and on the surface they sound similar, look similar, but actually they're quite different. So yeah. He domains. I came across your video just a few days ago. Your knowledge is perfect. Thank you. I'm searching for your videos. Thank you very much for kind support. सर मैंने एक यूलिप लेके रखा है. So यूलिप you should take only when you are deep into, I mean 3 लाख पर ईयर 1 प्रीमियम ही भरा है, तो क्या मुझे उसको बंद करके पी यस यू शुड बंद करके. आई डोंट नो. पहले तो यू जो चालू किया है उसका यू जस्ट फर्स्ट ऑफ ऑल टेक द 3 लाख रुपी बैक इफ़ यू कैन. ठीक है, वो तो लेना ही पड़ेगा वापस. यू कैन नॉट जस्ट गिव अवे मनी टू यूलिप. तो पहले उसका विड्रॉल का प्रोसेस आप समझ के, NPS एंड PPF आर एनी डे बेटर. ठीक है, के बाद see this ULIP na, this ULIP is a bigger scam than finfluencers. Okay, this ULIP is this industry only, actually this entire industry only. I mean, they pay the amount of money they pay the intermediary. Everyone is making money except the final client, and the marketing is done in a manner that you are supposed to feel good about giving away 3 lakh rupees per year to someone for what? If SEBI was really so proactive, then instead of trying to govern YouTube channels, which don't do any business actually, if they simply look at some large funds or firms, what they're doing with their sales team, they will have a pretty good idea of what's actually going on. So Rahul has obviously paid 3 lakh rupees per year premium. That's the commitment. So the commitment is to make 25,000 rupees per month. It's just such a huge amount to make that kind of 25,000 rupees per month. You can employ 2 people at your home full time and get work done. Like either the person could be a driver or a person could, I mean, you could even hire I could hire a social media manager with this kind of money. So yeah. Means, what can I say? That's the reason why I say that one must go for public provident fund, because it's free, it's cheap. Sukanya Samriddhi scheme, sovereign gold bonds when they were on, national pension schemes. These are the only places where people are not robbing you of your money. Even this mutual fund and all, 1.122%, 0.5% expense ratio, even in a debt fund. I mean, it's just, what can I say about it? Thank you. This is for a video that came from Nifty next week. Omkar, I wish you the luck in upcoming chess tournament. Okay, fine. So this is a long time back, 5 months back. Yeah, so I eventually did get a little bit of a rating, and I will, he has mentioned here. Yeah. Yeah, we can play chess sometime for sure. I just started playing it some time back. So great. I hope I have answered most of the queries that are there in this video. This video was slightly long because I thought I'll try my best to answer whatever I can. I'll also just go to LinkedIn, and I'll also just reply to Shashank's query, where Shashank has basically shared that he is doing better as a trader, and he's learned a few features which help him book losses sooner. Now here Shashank's point is that your YouTube channel can be better, which I certainly agree with. Please use a simple channel name, which I completely 100% agree with. Make good thumbnails using Gemini or ChatGPT. Again, I agree with everything you're saying. And some catchy titles. 100% whatever you're saying is correct. If you need some help, then I can help you absolutely free. I really, really appreciate that, because I would like to stay in touch with your perspective about trading. I very much appreciate that, Sashank, what you are saying. The thing is that I don't have a plan. I mean, this is what I was thinking of doing for some time. Believe it or not, like there are certain firms which are reaching out to me for exactly what you're doing, that they will help me out with it, and they will help me out with it at low cost and things of that sort, or maybe no cost. We'll see how that goes. I appreciate what you have sent. Thank you for your support. Regarding my perspective about trading, is just here on this channel with a difficult name and not catchy thumbnail, and no use of AI. In that channel, you will find my perspective. Someday maybe there will be a channel where when I'm talking there are flying graphics and visuals, but I'm not too sure. I don't see that happening anytime soon. Uh, Here you also say difference between technical and behavioral skills. Yeah, I'll speak about this in some video. Can you please tell the split between technical skills and behavior? At a certain level there is little difference. It's just how you articulate this, and no, it's really okay. It is okay. You can I was just busy, Diwali and things of that sort, so I hope I've answered your question. Obviously Saurabh has also sent in a question here. Okay, thank you. So recently using daily time frame trend assessment and hourly RSI for entry on 15-minute charts for commodities like gold, silver, which is fine. So few trades gave exceptional, which is good. Now stop losses are being hit frequently. Frequent stop losses of this system hit means that that particular commodity has begun to range. Okay, it has started ranging, and you will then, and if it is ranging, then your trend assessment should start changing. Okay, your trend assessment should start changing, and if this changes, then this should no longer be applicable. Now stop losses are being hit frequently, so whenever you use a trend following security on a ranging security, your stop loss will get hit frequently, and vice versa. If your stop loss hits, then usually that trending security is begun to range. Should I continue to switch to positional trading? Would mean you're changing your time frame. I think you can do that. Yes, it is too overstretched. So you can switch on, because the thing is that gold and silver are so overbought and the trend is so bullish. Silver is yet to establish a clear breakout against the dollar, but gold has certainly done it. Now you obviously want to buy the pullback, but if you buy the pullback on the hourly chart, whereas that stock has been running for a year, yeah, it's going to be a very, very shallow pullback. You will have to wait for a pullback on the daily, weekly. You'll have to approach gold as an investor in the extreme short term, or if you're going long as a trader, you'll just have to wait for it to at least become oversold on the daily. It is waiting for it to become oversold on 1 hour is too soon. Good conceptual books are books published by Wiley Publication. They will be a good way of doing it. And is there any way to purchase your book? The book that I wrote, I got into a litigation with the publisher, and I'm committed to pretty much destroying him. I just have a lawyer who is committed in me taking up a settlement. I don't know. I don't want a settlement. So I once again thank you very much, Saurabh, for your kind message. So in general, I hope I hope that I have answered as many questions as possible, and yeah, and I have some more experiences on SEBI regulations and things like that. I'll share with you in subsequent videos. So I'll close this rather lengthy video. Wishing you all the best for Diwali and having a great year ahead. Thank you for your time.